Hello, I'm James Yardley, and today I'm joined by Edmund Harriss, the elite rated manager of the Guinness Asian Equity Income Fund. Thanks for joining us, Edmund.
Hi.
Edmund, we've heard a lot about inflation. We've started to see economies reopen, but now we're also hearing maybe about inflation peaking in Asia. So what's your view on this? Where are we heading?
Probably a bit early to say that consumer price inflation is peaking. What we've noted is it has not run away. Inflationary pressures so far are mostly confined to producer price inflation. So that is the cost of manufactured goods before they reach the consumer. And the question we have is the degree to which those cost pressures will be passed on to consumer prices. And that, I think, is a global issue that we are all trying to wrestle with.
And we've had a lot of supply disruptions. We've had issues with the Suez Canal and some of the Chinese ports and things as well. Are these problems now resolving themselves, or are they going to persist for longer?
I would say it's a gradual resolution. I think it's a reflection that supply chains are very tight. They're very busy. So it doesn't take much disruption to cause traffic to back up. So the closure of the Chinese port, or the partial closure of Yantian port in southern China, for example, meant that queues of ships built up pretty rapidly. Goods needed to be diverted to other ports, and so that created congestion elsewhere. And that has caused considerable pricing pressures. But I think these transport links are going to resolve themselves. I think it's just worth bearing in mind on a wider scope is that as the economies open up, there is an uneven process of reopening. And so various parts of the supply chain are opening up at different stages. And so individual bottlenecks can occur at various stages. And I think that is part of the process of reopening after really quite a long period of disruption.
We hear a lot about the power of the Chinese consumer. What is confidence like at the moment? Is it coming back? Is tourism coming back?
Definitely coming back. I think it's true to say that consumer confidence and consumer spending is lagging business. So if you're looking at business confidence and then consumer confidence, business confidence is very high in anticipation of a resumption of demand. Demand is lagging somewhat, but is definitely coming through. And we can see that in retail sales growth, and we can see that through online channels. But we have to bear in mind that it's a bit of a long road. In the recent Dragon Boat Festival holidays, the government recorded, I think, tourist movements and tourist spending running at around 3/4 of pre-pandemic levels. Car sales is another good measure of consumer confidence. And in China, you've seen a rebound over 2020, but it's still flat against 2019, which again, not bad, but what we're really looking for is that acceleration. And I would say that is coming through rather than is fully evident right now.
And what is your favorite area in the region at the moment? Because China has underperformed places like India recently. Do you think that will persist, or are we due for that to swing back in the other direction now?
I think North Asia is a more attractive region to me than South Asia and Southeast Asia. That is because the economies are deeper, more robust, have good external exposures, but also have pretty deep consumer markets. So by North Asia, I'm talking China, Hong Kong, Taiwan, and Korea. The underperformance of China as a country area can be linked to the underperformance of the big index heavyweights like Alibaba and Tencent that are caught up in intensifying competition and regulatory change as well. But underneath that, in China and in Taiwan and in Korea, there are plenty of interesting companies to go for that are still doing very well. So that is the region where I see the best opportunities at the moment.
And what are some of your most interesting stocks in the portfolio at the moment?
Well, we've got quite a spread of companies across consumer discretionary, consumer staples, through healthcare, financials, technology, and so forth. And what I'd highlight are sort of three areas that I think are interesting. First one will be Elite Material in Taiwan, which is a manufacturer of laminates for printed circuit boards. It's pretty specialized production, and that goes into both the smartphones and handheld devices. But increasingly now, they are supplying into IT infrastructure. And so they're a part of that capital expenditure boom, the growth in data centers, for example, in cloud computing, as well as just the consumer side. So that company is going from strength to strength and is generating a lot of cash and growing its dividend very nicely. A second company that is interesting, I think, is Shenzhou International. It's a textile manufacturer, textile and apparel, based in China, but also with manufacturing facilities in Southeast Asia, particularly Vietnam and Cambodia. They've got a very wide range of customers. It's not just sporting goods or sort of mass market brands like Uniqlo, for example. They do supply Nike, they supply Puma, but they also supply Ralph Lauren. So quite a broad range. And so they are a pretty good play, not only for demand in the region, but opening up in the economies of the US and Europe too. And so we can see on the online distribution channels, apparel is going well, and Shenzhou is a leading supplier into that area. And the third one I think is interesting is JB Hi-Fi in Australia. Completely different type of business. It's an electricals retailer, but also is supplying household goods and durables. Has been a significant beneficiary of the work from home trend. It operates in a highly competitive market and has proven itself over time. And so again, we've got a different dynamic here, but nevertheless still able to optimize what are very tricky conditions.
And just finally, you are an income fund. So what is the outlook for dividends in Asia at the moment? Have they come back strongly? Are we seeing dividend growth again?
We are seeing dividend growth, and we're certainly seeing it coming through from the higher quality cash generative businesses. You've got this element of very cyclical businesses like miners and materials. You can see how commodity prices have increased, and those companies will be very likely to be paying higher dividends, but the sustainability of those dividends is much more in doubt. What has been very encouraging in Asia is that the underlying businesses across sectors have generally been doing pretty well. And so while dividends certainly pulled back last year, there is a nice rebound coming through. And the fund recently paid out its mid-year distribution. It was above 2020 levels, certainly, was actually a little bit higher in dollar terms against 2019. And that is the measure of how well the operating performance of these companies has been, separately from the share price performance, which has been coming through very well in more recent months.
Great. Well, thank you very much for joining us today, Edmund.
Thanks very much.
And if you'd like to learn more about the Guinness Asian Equity Income Fund, please visit fundcalibre.com.